Almost without warning, the shilling last week began to strengthen against the US dollar, now closing today within the 2500 ranges. The reason? Offshore forex and portfolio traders.
The low interest rate regime in the global currencies, mainly dollar, mainly pound. Right now we are seeing offshore investors trying to add on risk, which means coming into emerging market currencies which offer a much higher yield than before.
It makes sense because the rate of return on Uganda's treasury bills has some at 20%. Plus Uganda is open. You come and you go with your money.
The recent pronouncement of the Central Bank of Kenya and in a large part of Tanzania trying to restrict offshore trading in terms of tenor, Uganda looks more like a much better haven because we don't have those restrictions. So investors can still come in at any time, buy the shortest dated paper and go out.
In Kenya, you cannot sell off government instruments if you have held them for less than a year. But this freedom to come and go is the same reason why in Uganda, if you're a business person whose activity partly relies on dollars, you must still be afraid, even when the shilling seems to be getting some relief.
The Uganda shilling strengthening, as I mentioned before, was because of offshore. It can also be the same reason for it to go back out, to go back up if they decide to pull out. So the Uganda shilling, because of its liberalized environment, is very prone for a sharp retracement back to the same levels.
So, do not let your breath go. Hold it still and still retain your survival instinct. Continue doing your homework because it is still dangerous out there. Samuel Setumba, NTV Business.